Hey everyone, welcome back to my channel. It's Matthew Varga here. In today's video, we're gonna go over something I get asked about a lot, and that's investing 101. So a lot of people who watch my videos, they've never invested before and they just really don't know where to start. So I always get asked if I could do some videos about the basics of investing, how to get started. So I thought I'd do a bit of a beginner series for investing. We're gonna go over what stocks are, what the stock market is, how to invest in stocks, what type of stocks you should be looking for. We're gonna go over dividends, what are dividends, how they can help you retire early. We're gonna talk about cryptocurrency. We're gonna go over a bunch of different things, all types of different investments, so that way you can finish this series and have a great understanding about investing and begin your investing journey. So in this video today, we're gonna go over sort of a general investing 101. We're gonna talk about stocks, the stock market, different types of investments. So I'll briefly discuss bonds and options and index funds and a little bit on cryptocurrency, just to give you a bit of a base knowledge. And then in future videos, I'll dive deep into all these individual topics. So this is a great video to watch if you're new to investing, or even if you've been investing before and you want a bit of a refresher on some things. We'll also look at brokerage accounts and what they are and why you need them to invest. So if you're new to this channel is all about teaching you how to gain financial independence and retire early. Whether you're looking to do this with an Airbnb business, with index funds, or just the traditional buy and hold real estate, we've used all these strategies over the last 5 years to help us gain financial independence and retire in our 30s. If you're looking to gain more financial freedom and retire early, then make sure you subscribe to this channel so you don't miss out on future videos. Also, make sure you follow me on Instagram and TikTok, where I post more daily videos showing you the updates on our investment journey and showing you different ways to gain financial independence. All right, now let's jump into today's video and get you started on becoming an investor. So one of the first things that you need to know when getting started with investing is why do you need to invest and how that's going to help benefit you in the future. I think many people have this stigma about investing that it's only for people with a financial background, that it's too complicated to understand. So instead of investing, they just end up putting their money into a savings account with the bank. And the reality is that putting your money into a bank and just leaving it there is one of the worst things you can do for your future. The reason for that is inflation. Now, inflation is the silent killer of people's financial futures. And the sad thing is that most people don't really understand what inflation is or how it has such a big impact on their investments and their financial future. What is inflation? To put it simply, inflation is the increase in the cost of goods over time. Or another way to think of it is the increase in your daily cost of living. As the cost of items is going up every day, that means that your purchasing power is going down. As I'm sure you can tell, $1 today does not get you the same thing that it did 10 years ago, 20 years ago, 50 years ago. I mean, back in the 1970s, $1 could have bought you 4 cups of coffee, where today it can't even buy you 1. So that's inflation at work. The price of things just keeps going up and up over time. And as you can probably tell over these last few years, it just seems like every day the cost of things is just going up dramatically. I mean, it's getting pretty expensive today just to live a normal life. And that's why investing is so important. Over the last few months, the rate of inflation in the United States has been over 5%. So let's just say for the year, we're gonna have a 5% inflation rate. That means that $100 today is only going to be worth $95 in a year's time, because that $100 that we earn today is only going to buy us $95 worth of goods next year because of that 5% inflation. If this happens year over year, you can see how you're gradually just falling farther and farther behind as the cost of things keeps going up. Now, I know some people will say, well, I get a raise from my work each year, which is great. But not everyone gets a raise at work, and not everyone and most people don't get a raise of 5% to keep up with that inflation. I mean, most people, and when I was working a job, it was more like a 2% raise at best, maybe a 3%. If you're getting that 2%, 3% raise, or not even a raise at all, and inflation is still going up by 5%, you can see how your raise is not keeping up with inflation and you're just falling, like I said, farther and farther behind. But let's just say you are lucky enough to get that 5% raise, so you're keeping up with inflation. Well, all that means is that you're staying in the exact same place that you were last year. So you're not getting ahead, you're just staying still. Now, this is where investing comes into play to help you get ahead in life. And if you're just putting your money into a savings account, it just doesn't cut it anymore. I mean, nowadays, the average interest rate that you might get on a savings account, if you're really lucky, is let's say 1%, although most pay way less than 1%, but let's just say you're getting 1%. If inflation is going up by 5% and you are only getting a 1% return on your money in a savings account, that means that even though you're saving money and doing the right thing, you're actually losing 4% each year. Putting your money into a savings account will not keep up with inflation, and that is why you need to look at investing so you can get a better return than inflation, which is going to help bring you farther and farther ahead each year. Now, the other great thing about stocks and investments is that they actually have a bit of a hedge against inflation. And what I mean by that is, as we know, the price of things is going up each year. So let's take Apple, for example. Like a new Apple laptop costs more today than it did 2, 3, 5 years ago. The reason for that is because the cost to make that Apple computer goes up each year. You got labor costs that goes up, material prices go up. So it costs Apple more to make that computer than it did last year. So what do? They pass that expense onto you, the consumer, by charging you more for that product than they did last year. That means that they're able to make the same revenue off of each computer and more as they keep increasing prices. So where this benefits the investor is if you own shares in Apple, so you have some stock of Apple, well, because they're making more and more revenue, they're actually going to have a higher and higher price of their stock. So as inflation goes up, stock prices go up as well, so you're benefiting from inflation by owning those investments. By investing your money in good companies, you're able to benefit from these price increases and benefit from inflation. And you can see that if you're investing in a good company that's earning a higher than average return, that's earning more than inflation, that's how you're going to get ahead and stay ahead in today's world. So for example, the average return on the S&P 500 has been 10% a year. So if you're invested in, say, an index fund for the S&P 500 earning 10% and inflation is 5%, you're at least keeping up with inflation plus making more on top. So now that we have a better understanding of why investing is so important, the next thing we need to think about is what type of investor are you? In order to find out what kind of investor you are, you need to look inside yourself and ask yourself some key questions. I mean, are you a person that likes to do research, likes numbers, likes some analytical thinking? If so, you might be a more active investor, and that will determine what kind of investments you invest in. Or does the idea of doing any research or numbers just bore you and you have no interest in it? If so, then you're probably a more passive investor and you're going to be looking for a different type of investment. So some questions you might want to ask yourself is, how much time are you willing to spend on your investments and doing research? Are you easily scared by market fluctuations, the up and downs of the market, which might cause you to make bad decisions based out of fear? What's your time horizon for this money? Is this for your retirement and you've got 40 years of investing ahead of you so you can do things a little bit differently? Whereas if you're looking to, purchase a home in the next 5 years, you might be looking at entirely different investments based on that shorter time frame. And then one of the other really important questions to ask yourself is, how much risk are you willing to take? So your risk profile really helps determine what kind of investing that you want and what the balance of your investment portfolio will be. Finding out the answers to some of these questions is really going to help determine whether you're going to be looking at bonds or stocks or index funds. So now that we have a better understanding of why we need to invest and what type of investor we are, the next thing we really need to look at is, what are we going to invest in? There are many different types of investments out there that you can invest in. Some are more complex, some are more passive. I mean, for more complex investments, we have stocks or options, NFTs, we have cryptocurrency. If you're looking for something more hands-off, we have mutual funds, index funds, bonds. So there's a wide variety of investments out there. In this video, I'm going to just briefly touch on a number of different investments that you can start doing some research on. And then in future videos, I'm going to film a more in-depth video about each one of these investments, really breaking them down so you have a really clear idea of how to invest in them. And for some of these investments, we'll actually jump onto a trading platform and I'll show you exactly what it looks like to buy and sell different types of investments. So first up, we have individual stocks. So you've probably heard the term share or stock. I mean, usually the terms share and stock are used interchangeably to mean the same thing. And really what a stock is a piece of ownership in a particular company that gives you certain rights as an owner of those shares, and it gives you the ability to benefit in the growth of that company. So if you own a share of Tesla, you actually own a small piece of that company. When someone owns shares of a company, there are usually two ways that they can benefit as an owner of those shares. First one is capital gains. Now, what a capital gain is it's when the value of those shares go up in price. For example, let's say we bought one share of Apple and we bought it for $100 today. Now, let's just say tomorrow, the price of that share has gone up by $10, so now it's worth $110, which means we could sell that one Apple share that we own to someone else for $110. So we've made a $10 capital gain. We paid $100, sold it for $110, we made a gain of $10. So that's a capital gain, and that's how you can benefit from owning shares in a company. The other way that you can benefit from owning shares in a company is called a dividend. Now, normally a dividend is for bigger companies that are a bit more solid, like Coca-Cola, Walmart. It's usually not for the smaller growth companies. So what a dividend is, it's when a company pays out a portion of its profits to the shareholders of the company. So let's just say, for example, that Walmart had a great year, sold a lot, made billions of dollars. So what they actually do is they pay out a portion of that profit that they earned that year out to everyone who owns shares of that company. By owning shares of a company, you can benefit from either a capital gain, you can benefit from a dividend, or if you're really lucky, you can actually benefit from both, which is when the value of that share keeps going up in price and that company is paying out a dividend to its shareholders, so you're sort of getting the best of both worlds. Next up, we have bonds. So bonds are very different than stocks. A bond is what's known as a fixed income instrument. So really a bond is more like a loan that you are lending to, whether it's a company or the government or, whoever it is, and you're lending that money to that company and they are paying you a set amount of interest for a set period of time while that loan's in place. Now, bonds tend to be a more secure and safe investment, which is why you're usually going to get a lower return on a bond than you would a stock because you're taking less risk with a bond. Although I don't personally invest in bonds, they can definitely have an important role in most people's investment portfolios. Normally when the stock market is dropping, the value of bonds tends to go up because people leave the higher risk investment like stocks and they put that money into bonds, which drives the price up. So you can see how owning some stocks and bonds can help you in an up and a down market. Next up, we have index funds. Now, I've already done a full video breaking down index funds. I did it a few months ago, so I'm going to link it here, and I highly recommend that you give that video a watch because it is a very underrated but really great investment strategy that I think will benefit most people out there. But basically what an index fund is, it's a pool of money from a lot of different investors, and those funds are used to purchase companies that are part of a certain stock market index. So one of the most popular indexes out there that most people have heard of is called the S&P 500. And really what that is, it's a collection of the 500 biggest companies in the US. So you'll have your Walmart, Johnson & Johnson, Coca-Cola, Home Depot. You have all these big companies that make up the top 500. So if the index fund is tracking the S&P 500, that fund is actually going to own shares in all 500 of those companies that make up that index. As you can see, it's actually a really great way for people who looking for a more hands-off investment approach where they can own a small piece of 500 of the biggest companies, where if you wanted to do that yourself, you'd probably have to have quite a large amount of capital to do it. So this allows you to get exposure to all these different companies for a much lower price. Even one of the greatest investors out there of all time, Warren Buffett, has said before that a low-cost index fund is probably one of the wisest investments for the vast majority of investors out there. Now, it's also important to know that there are a lot of different types of index funds out there that you can look into. There's some that track the Canadian stock market, the US stock market. They have index funds for bonds, real estate investments. They have it for developing nations and countries. So if you want exposure to China, Brazil, those places, you can buy index funds for that. Some of the key index funds that you might want to take a look at could be SPY, so SPY, which tracks the S&P 500. There's the QQQ, which tracks the NASDAQ. And then there's also a big variety of great index funds from Vanguard, which is a investment company out there too. So you can take a look and see what they have. All right, next up we have options trading. Now I've been doing option trading for a couple of months now, and I gotta say I've really been enjoying it. I found it to be a great way to create a new, pretty passive stream of income once you get the hang of it. But it's definitely a bit more of an advanced strategy. I'm gonna do a lot of videos on it in the future, so make sure you're subscribed so you don't miss out on those. But really what option trading is it's known as a derivative investment because the value of an option is based off of a particular stock that you're trading on. So an option is something that's based off of another product. That's why it's called a derivative investment. So for example, you can trade options on Netflix. You can never even own the Netflix stock, yet you can still generate capital gains and profit from trading options, even though you never own the stock. So it is a really cool strategy if you're willing to be a little bit more hands-on. It's definitely not for a passive investor, but if you're willing to learn a little bit more about it, I think it's a fantastic investment strategy. And like I said, it's generating crazy cash flow for me with it. So I'll do a lot more videos on it in the future. Next up, we have cryptocurrency. Now, I think most people by now have probably heard of Bitcoin. It's probably the most popular cryptocurrency out there, but there are quite literally hundreds of different types of coins out there. I mean, we have Ethereum, which is the second biggest coin. We've got Litecoin. We've got Dogecoin, I don't even know how to say it. We've got Polkadot. There's just hundreds of coins out there. Cryptocurrency is definitely something I'm gonna do more videos on because I think more and more people are seeing the value in cryptocurrency, and I really think it's the way of the future. And it's important to be on top of trends and not fall behind. So that way you're not the one trying to catch up. You can try to be ahead of the trends. So cryptocurrency is definitely something I'm gonna do more content on because I think everyone needs to know about it and really get educated on it. So now that we have a bit of an idea of the different types of investments out there that we could possibly invest in if we wanted to, the next thing you need to know is what's gonna be your asset allocation for your portfolio. So really all that means is what different types of investments are you gonna own and what percentage of each type are you gonna own. So for example, you could have 50% stocks and 50% bonds. That would be your asset allocation. Or you could have 60% stocks, 30% bonds, 10% cryptocurrency. The great thing is that there's a lot of different variety out there, and you can really pick and choose how you want to structure your portfolio based on what type of investments you like and what interests you. Now, typically the general investment advice out there that you'll probably hear from your banker or, sort of the old school way of thinking is that your investment portfolio should be built based upon like your age. So if you're 20, then you can have a higher risk profile. So you'd probably be more like 80% stocks, 20% bonds. And then as you get older, you gradually shift, your portfolio from owning less and less stocks and more bonds. So when you're 65 and retired, usually at that point you're being recommended to have 80% bonds and only 20% stocks. I personally don't really agree with this way of thinking. I think it was sort of the old way, but now there's just so many different investments out there that if you just limit yourself to just stocks and bonds, I think you're missing out on a whole world of things. Also, I don't really agree with the fact that just because you're younger means you should have, a higher risk profile, because not everyone who's younger wants to take on a lot of risk, and that's fine. And also, just because you're 65, I don't see why you shouldn't be able to benefit from the gains in the stock market if you, do your research and you know what you're doing. So I think that general investment advice is sort of the way of the dodo. It's not really the way to think of things anymore. So really you need to, like I said, answer those questions from earlier, really figure out what type of investor you are, and then you can build your portfolio based on that. Now, the next important thing that you need to figure out is how much money are you going to invest? Now, for a lot of people, when you're trying to figure out how much money you need to invest, there's probably some key questions you need to ask yourself. At the end of each month, after you pay all your bills and take care of all your essentials, do you have money left over? or have you spent everything by the end of the month? Do you have lots of debt? If you have a lot of high interest debt, say credit cards that are 20% interest, then you might want to look at paying those off first before you start investing. Now, I actually did a full video on whether you should invest first or save first. That really kind of breaks down some of the key things that you need to know to figure out what's best for you. So I'm going to link that down below, and I highly recommend that after this video, you go watch that one to give yourself a better idea of what is the right thing for you to get started with. Another important thing that you might want to look into before you start investing is just creating your budget. It's always good to have a budget set. I actually have a free budgeting guide that you can download. I'll also link that down below. So if you don't have a budget yet, go and download that template and start getting your budget created so you can figure out exactly how much each month you're going to invest. So let's just say that you've answered these questions, you've got your budget in place, and you've realized that you've got $500 a month extra that you could do something with. So the next thing you're probably going to ask is, how much of this $500 should I invest? The reality is that you should invest as much of that as you possibly can. I would highly recommend that you invest the full $500 if you can. Now, if you're maybe a little bit apprehensive to start investing because you're just getting started, I understand that. A good habit to get started with, if you haven't done it yet, is to create what's called an automatic transfer or an automatic investment, which really what that means is that you're going to have a set amount of money, whether it's monthly, bi-weekly, each week, go from your account into your investment. So you're setting up this automatic transfer system that's going to get you investing, whether it be $50 or $100 or $1,000, whatever it is, it's going to automatically go from your account into your investments. And this is a great way to get started with investing if you're a little apprehensive as a new beginner. Now, one thing that you should look to do is set a goal for yourself to increase this transfer, whether it be at least once a year, but the more frequently you can increase this transfer, the better it's going to be for you. The math is really quite simple. The more you invest, the better return that you make on those investments, the sooner you'll be able to retire. All right, so now we know why it's important to invest. We know a little bit more about what type of investor we think we're going to be. We've looked into different types of investments, and we've talked about an asset allocation, so how you're going to structure your investments. The next thing we need to know is, how do you actually buy an investment? This is a bit more of an in-depth topic, so in each of those future videos where I go over the different types of investments in more detail, I'm going to actually show you how to buy these investments in those videos, just that way you can see the full picture on purchasing investments and what that looks like. But here's a quick breakdown. In order to invest your money, you need to have a special account set up that's called a brokerage account. Some people call it a trading account. Now, this account is an account that will allow you to purchase, different types of investments in it. So you can't just go to your bank, open up a savings account, and then buy stocks and bonds and that inside a savings account. You actually need to have a brokerage account set up in order to purchase investments. There are many different types of companies out there that offer these brokerage accounts. Most big financial institutions offer these brokerage accounts, so you can actually probably go into your branch at your local bank that you bank with and see if they can open up a brokerage account for you. Some of the big brokerage names include TD Ameritrade, we have Fidelity, we have Vanguard, we have E-Trade, we have Quest Trade. We also have Interactive Brokers. So Interactive Brokers is a trading company that I use for my brokerage account. I've just found their platform to be the easiest to use. They have a good app that allows me to buy and sell stocks quite easily. Also, I've just found that their commissions and their trading fees tend to be some of the lowest out there that I've found. So for example, for me, when I'm purchasing a stock and I'm paying like a trading fee, which all brokerage companies charge you when you're doing any kind of buying and selling of investments. With Interactive Brokers, I'm only paying $1. Whether I'm buying one share of a company or I'm buying 100 shares, I'm paying that $1. Whereas I've seen some other competitors out there that charge $4.99 or $9.99 to make a trade. If you're doing 4 trades in a month, let's just say like once every week, you can see how with one company, Interactive Brokers, for me, I'm paying $4, whereas someone else might be paying $40 if they're paying that $10 per trade. So I would much rather pay the $4, save that $36 for myself, and use it for more investments instead of it going to those billion-dollar banks. If you want to know more about Interactive Brokers to see if it's the right trading platform for you, I'll have a link down below. You can check it out. I think if you sign up through that link, you get some free cash or some free stocks with it. So definitely worth a look to see if it's the right fit for you. Opening up these brokerage accounts is really quite simple nowadays. It's not that complicated, so don't be scared by it. It's just like opening up a normal bank account where you're gonna have to, show your proof of address, ID. I mean, most of this stuff now can just be done right online. You don't even have to go in person anymore. You just upload your documents, and depending on the platform, it can be opened within a matter of minutes, or it might take a day or two for them to go over that paper that you sent in order to open up your account. Now, after you've opened up your brokerage account, you have to fund the account. So that just means you're putting money into the account. So there is a lot of different ways that you can fund your brokerage account. Like if you have a brokerage account with your bank, you can probably just do a quick, easy transfer from your online banking. You can do a wire transfer if you're transferring a large amount of money. You can do e-transfers to fund an account, or you can even set up some of them as a bill payment. So you're just paying them like you would any other bill. The great thing with that option, I think, is that you can also set it up as like a reoccurring bill payment. So that's one way to set up that automatic transfer that I was talking about earlier. It's never been easier to open up a trading account, to fund and get money into a trading account, and to start investing. Since we're on the topic of brokerage accounts, another thing that you're probably gonna have to look into is what type of brokerage account you wanna open. We're not gonna go too in depth into this because I'm gonna do a full video on it and it's a very long topic, but you're gonna wanna look to see if you're gonna set up a individual trading account, which might be like a non-registered trading account. So it's not a retirement trading account. Those accounts you do pay taxes on, you declare your capital gains and all that. And then we also have the retirement savings account, which could be a 401k or an IRA, or in Canada it would be an RRSP. So these are different types of accounts that you could look to set up depending on your needs as an investor. The purpose of today's video was to give you a foundation and a general overview of investing and personal finance. I'm sure after watching this video, you probably have a ton of questions that have just popped up in your mind. So I'd highly recommend that you watch this video maybe a couple more times, because we went over a lot of different things. So by watching it a few more times, you might answer some of those questions. I also encourage you to continue to grow your investing knowledge. Read books, read articles, listen to podcasts, subscribe to this channel, and watch all my future videos. This knowledge is going to help you feel more comfortable and confident with investing, which will help make it easier and easier over time to continue to invest. Make sure you give this video a big thumbs up. Subscribe if you're not already subscribed, as I've said a lot of times throughout this video, but I just think there's going to be so much more great videos in the future that you're not going to want to miss out on. If you have any comments or questions, leave them down below and I'll be sure to answer you down there. Thanks again for watching, guys, and I'll see you next week.